'cause I'm the tax man. Yeah, I'm the tax man.
Welcome back to The Price of Business. I'm your host, Kevin Price, talking to you about you and your business. You know that music. I even warned you the last segment that my good friend Bob Loeser is in the house. Taxman Bob, we officially call him here on The Price of Business, and gives us our regular updates. This is the first post-April 15th update we've had from Bob, and delighted to see you, my friend.
Good morning. A deep sigh of relief for all those that prepare tax returns.
Yes, absolutely. And then those poor souls who are still waiting till August and September, October rather. God bless them.
There is one word for them, although they're my clients. They're called procrastinators.
Procrastinators, yes, I understand that. So very quickly, kind of give us an update on your firm itself. It's been quite a while since we talked about your clientele, giving that whole overview of who you have as clients and what your business looks like.
Go backwards. A lot of our personal tax return clients, which are over 700 total, range anywhere from students in college that are students and kids of existing clients to multimillionaires. Businesses are anywhere from, little corporate entities at $60,000 a year gross revenues to $60 million gross revenues. And we do anything in between in regards to tax planning, talking about 401ks, profit sharing plan, decisions on buying or building a warehouse or releasing new space, etc. In addition, in the younger stage of businesses, we help them develop a plan of attack to get from point A to point B. Point A may be $75,000 in the first year to $500,000 in year 4, and how to go about it without busting at the seams or going bankrupt because you haven't thought about cash flow concerns and things of that nature.
Yeah. So of that 700, kind of give us a percentage of personal versus business accounts.
Well, the 700 is personal alone. There's another,
and then you have
another 250 to 300 business returns.
That's amazing.
And anywhere from family limited partnerships to trusts, that are set up for kids and college funds, etc., to estates. If someone passes away, putting together the assets of the estates and then distributing them to the beneficiaries and trustees. To corporations, both regular C corporations and S corporations, and a little bit of background knowledge to that. C Corp is like the old Exxon, IBM, Mobil, etc., that the only way to pass income to the shareholders is through dividends, but that creates a double taxation.
Right.
All right. And S Corp, you can pay those dividends, and it's not double taxation. The corporation, through what they call a flow-through, only is taxed once. So a lot of my entities, inclusive of myself, are set up as S corporations so that I take a reasonable salary, and then the extra or surplus I take out is not subject to Social Security tax, but is subject to income tax.
Right. So we got that behind us, although, like you said, a huge number are still got work to do.
We probably have about 200, somewhere 180 to 200.
Oh, but you got the vast majority
procrastinators.
Yeah, you did a good job. And I know you do a very, very good job of keeping your clients on track. You do a great job of saying, hey, if you don't want surprises, don't you set yourself up to be surprised.
That's correct.
Stuff like that I think is so crucial. You truly are the trusted advisor type, which I think is important.
Well, you either can sit on the sidelines and wait for them to come to you, or you, in no disrespect, get in their face.
Right.
Yeah, if they don't want you to get in their face, I've told my clients, just tell me no. But if you owe money come August because you've waited and there's a penalty, don't point the finger at me, because I came to you in November and said, where do we stand? And your response was, don't have time for it, don't need to pay you $200 to do my tax planning.
Right.
Hey, that's fine.
Yeah.
You put it in parameters. It's like, do you need a brain scan? No, I don't need it, doc. Everything's okay. And then 8 months later, you've got a tumor in the head, and you start pointing the finger at the doc saying, why didn't you force me to do the brain scan then?
Yeah. And unfortunately for a lot of your clients, it's $200 now or thousands later.
Right.
Right. And so it seems like an ounce of prevention.
Remember the old Meineke commercial, you can pay me now, you can pay me later?
Yeah.
Okay, it's exactly that.
Right.
Okay.
You want $99 breaks or $500 breaks?
Right.
So talk about, though, now, with that behind us, what's next on the
Well, we
screen?
still have, within a week, Texas franchise tax reports are due. And again, I'll make the statement that those come from the preparation of the federal corporate return, some partnership returns, but mostly corporate returns that are prepared. So if a client doesn't have their corporate return prepared, and that was due on March 15th with a September 15th extended deadline. Now you have to file an extension next week for a week and a half for the Texas franchise and make a good guess estimate as to how much you owe. Texas collects tax, in a sense, an income tax, although they don't call it an income tax, a franchise tax, on sales of over $1 million. Now, that doesn't mean you're paying a flat rate on $1 million. If you're a manufacturer, you get to take that percentage on what they call gross profit. If they are a business like mine with a personal service, it's gross revenues less things like employee salaries, bosses' salaries, etc. You don't get deductions for rent, utilities, office supplies, computer expense, etc. All right, it's just literally manpower.
So I know you've heard that the Abbott administration wants to see a dramatic reduction in the franchise tax
Yes.
and a dramatic, reduction of who would be even vulnerable to that tax, which
Right.
I think is great news.
15 years ago, they had a tax that was, for the most part, if you went over a certain dollar amount, the limit was $150, and if you went under this certain dollar amount, the limit was $35.
Yeah.
Right. So would it really be that bad for everybody to chip in $35 instead of the corporations that are doing well, that are providing jobs for the state, all right, are being taxed $15,000, $20,000, $25,000 because they meet the threshold of the million? I've got a client that had to write a check for $77,800 this year.
And eventually, and what the problem is this for the listener is that this is a tax on money they didn't actually make. Part of the tax, part of that 1% is on gross. That whole 1% is on gross revenue. It's not based on you paid rent. We don't care if part
Correct.
of that came on that.
But the thing which is interesting is if you're a manufacturing company and you do $20 million in sales and your manufacturing costs are 10, you're only going to pay tax on 10, less certain things like salaries and office. Okay, so is it reasonable? I don't know if 1%, if you're manufacturing, it's half of 1% is reasonable. Maybe it drops. But it really isn't that bad. They're not taxing you on 10%,
right,
or whatever. The issue is they're wanting people that, example, you're out in the suburbs here, your overhead and rent is a lot cheaper than being downtown in one of the buildings down there with the plush wooden paneling, et cetera, et cetera. They're saying to you, we don't care where you office, you're not getting a deduction either way. So somebody's saying, well, I'm paying $10,000 more a month in office rent expense, et cetera. State says, that's great. You're putting probably more people to work, but we don't care, right? And that's probably the way it should be. Does it really matter what kind of car you drive and how much you have in the bank, et cetera, as to the tax itself? Is it a flat tax? To a degree, it's a flat tax based upon everybody's revenue being at whatever level, okay? I just need to think it needs to be lower, or it needs to be a lot less if you hit the thresholds that you can't be taxed, whoever. Instead of $77,000, if the tax is no more than $5,000, are they really going to be collecting that much less?
Well, even without the franchise tax, they cut over $2.4 billion. Man, I would have loved to see them cut more into the franchise tax. I just hate it. I think it's fundamentally, I don't believe in taxing businesses anyway. You and I both know they're tax collectors anyway, and it's a cowardly way for businesses to get money from people because your cost for your services are in your cost to your clients.
If I knew, for example, that my cost of doing business in the state of Texas is $35 or $50 a year, I'd set up 10 businesses and doing.
Right.
Okay. I mean, that's I partly look at it saying that's my contribution, all right, to it. But should it be 5? I mean, this year for me, it was close to, what was it? It was close to like $5,000.
Mm-hmm.
Couldn't do anything about it.
Yeah.
Couldn't, I had a client years back I told you about that he lost $250,000, but the franchise tax came out that he owed $22,000. He actually did his own in crayon and then wrote them and said, that's nice. Your calculation shows I owe you $22. Can't pay it. I lost $250,000.
Yeah.
Right. And they negotiated down and took a settlement with him in regards to it. But, what do? You lose $250,000 and the state tax calculation still comes out to showing that you owe $22,000 because of your overhead costs and whatnot.
Incredible. Bob Loeser, Taxman Bob is what we call him around here. Final thoughts about what's happening in the economy right now. How do you feel about it?
Well, I mean, I think it's stagnant. I don't think it's going to help. For example, people that are going out to refinance homes right now, I mean, mortgage rates have gone up. 0.2%. I mean, 0.2% over the last 3 weeks.
Yeah.
You know,
I don't know if you saw in the last month, the price of oil has gone up $20 a barrel just in the last 30 days. So that's a sigh of relief, I guess, for Houstonians.
It
but,
hit 62 today.
Yeah.
Okay, and you know
it was
what?
40-something just 30 days ago.
Right. And would it really be that bad if it stuck around this level? Absolutely not.
Probably not. Probably
I mean,
not.
it's not gonna do what Mattress Mac thinks and hit 80,
Yeah, I was thinking about that. I bet he's getting. I noticed for the first time in months I've begun to see commercials again.
Right.
About the $80 or $85 a barrel.
Yeah, but I don't think it's going to hit anywhere near. But I think it's going to stick between 65 and 70.
It'd be interesting to see if there's some wild speculation around oil at the end of October. End of September. Is it December 1 or October 1?
For what?
For his challenge.
It's December 31st.
December 31st. Be interesting to see, like, the third week of the year, some wild speculation, mysterious wild speculation that made prices go up because, he could do that kind of thing.
I don't think he's got that much pull. I think he's got pull, but I don't think
maybe not that much.
I don't think he can make a phone
Maybe
call.
Give away a bunch of free furniture.
I don't think he can make a call to the Saudis and say,
come on, guys, give me a break.
Pull the table off the oil. Don't pump any for the next 3 weeks, right?
Well, it'd be interesting. He would be pretty brilliant if it ended up working in the end. All right, Bob Loeser. We call him Taxman Bob, and that's how you reach him. Taxman Bob at pdq.net. I'm Kevin Price. Good to see you, buddy.
Good to see you.
Good job as always, and we'll see you soon right here on The Price of Business.
There's one for